Oh, great. Awesome. Thank you.
All right. So now, when a sponsored move, a break of market structure is when supply or demand, to me, is taken out by a sponsored move. When supply or demand is taken out by a sponsored move, you ask me what is supply and what is demand. Now, on this movement, this is the last place we have demand. This is the last candle where we have a demand. According to ICT Boss, this week that was taken out, we have a close of candle below this last monthly week. This is a break of structure according to Michael. This is a break of wall structure. And if you look at it properly, you can see this monthly candle came and mitigate that week very clean. So this is a sponsored candle. A sponsored candle this is a sponsored candle, broke below this demand, cutting off demand. This is supply cutting off demand. Supply cutting off this demand, it's a break of market structure. There must be a close of candle below the week. For me, in my opinion, a break of market structure is when a sponsored candle closes below a supply or a demand zone. This is a demand zone, and we have the body candle closing below it. So this is a break of market structure. On that time frame. You see it on every time frame. So now back to structures, right? When a market structure for a bullish scenario is creating a higher highs and a higher low, a higher low, a higher highs and a higher low. Now, this is not a break of markets. This is a stop hunt. This candle did a stop hunt on this monthly demand zone, right? Now, this becomes our new low. This becomes our new low. And from all indication, we can't find any close of body candle below this low. So we didn't have a break of market structure there. That's why the market still continue on a bullish momentum. So for a bullish momentum to continue, price needs to keep breaking a higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. But when price fail to create a new high, are we following? I guess yes. When price fails to create a new high, thereby creating a new low and failing to break that high, we have a shift in market structure. It's called SMS, failed swing, failure swing. Like I tell you, this is a shift in market structure.
Okay.
Are you finding the class interesting?
Yes, yes. I'm writing down questions I have. Yes.
Okay, okay, very good. Now that is a shift in market structure, right? Now, when price fail to break this previous high here, this automatically becomes our old high. This becomes our new high, which is not a old high. Then price, look at what I said, price broke this, took out this demand zone with this strong sponsored move, and we have some, accumulations and all that. Price was doing a bit of stomp hunt and all on this zone. We have price retracing back into the demand zone, tapping into demand zone, and we have this fall. Right now, the candle that is responsible for the break of this market structure to the downside, it's this order block we have here, this monthly order block. This monthly order block we have here is responsible for the break of market structure to the downside.
Okay.
This is responsible for the break of market structure to the downside. I like using the body candle because ICT Boss mostly use the body candle, right? So I like using the body candle, except the candle is very small. That is when I tend to use the wick. So this is called a monthly order block.
Okay.
So whenever price, this is very important to price. Why? This is the last place. The body of the candle is not yet mitigated. The body of the candle is not yet mitigated. This was the last zone. This was the last zone that price placed a buy, that we have a buy, a demand. This was the last place we have a demand zone. This was the last place the banks they place a buy trade to sell. This was the last place they place a buy trade to sell. So the banks are on a drawdown on the body of this candle. Yeah, the tap on the wick, but the body is not properly tapped. So when price revisit this area, we are expecting either price tapping on the mean threshold. What is the mean threshold? Is the 50% of this block. Either price respect the 50% of this block or tapping on the body of this block. Now, price failed to break this high. Thereby, price started creating
lower highs and lower lows.
the high.
Mhm.
That's a high. Like I told you, we have our high there, right?
Right.
We have our high there, right? Then we begin to have a lower high. A lower high. A lower high. When I'm teaching you liquidity void for next week, you will understand why price come back to fill up some of this void it creates when it's making these massive bank movements. A lower high, and we have a lower low. For the bearish market scenario, we have a high. We must have a high first. Failing to break that high becomes a bearish market structure. We now begin to have a high, a lower high, a lower low, right? So this is a low. This here is a low, right?
Correct.
This here is a low, right? This is a low, lower low. That's a lower low. Then we have our low here. So we have our last known low. This is the candle that sponsored this old downward move. This is the candle that sponsored price to this downward move to break the whole of this structure to the downside. Now, we have a low, like I said here on the spot. We have a low, like I said, on the spot. Now, when you have a low, you expect for the bearish market scenario to continue. Price should create a new low. That's why we have lower lows. Lows that was broken with another low. Low that was broken with another low. So a lower low. A lower low. Now, when you have the last low, that is not the lower, you have a low now, and price has not broken that low. For price failing to break that low at the moment, that place automatically becomes your new low. Are you following? This now is our new low. After price broke this, creates this low, it couldn't break this low. We have a sharp move. When I'm teaching you how to frame your setup, I'll tell you why we couldn't have our price moving below the spot, right? We're doing framing of setup and flashcard, but today we are just dealing on market structure, so I don't want to overwhelm you. I want you to really understand market structure properly, which can actually give you good trades every day before we can now start talking about, framing of setup. By then you understand why price does what they do, right? Now we already have this low. Are we together, right? We already have this low, and price couldn't create a new low. It went and created a high. So this is a lower high because this is not higher than this one. It's a lower high. Then price came back and create another low. But this is not a low. This is called a higher
low. And it's not a lower low because it didn't go lower than the previous low.
Exactly.
Right? Okay.
Exactly.
It's just a little bit higher than that one, but it's still a low. So that's why we're going to call it a higher low, right?
Yeah, I'm trying to clone this higher low. It's giving me higher highs. It's writing higher highs. I think I need to.
I guess, yeah. If you put your T there, your T for text, it'll let you do it, right?
Yeah, I want to do a lower low, a higher low. Let me just write the text.
It's one up there, yeah. There's a way you can make all those words in TradingView too, so that you just pull it down instead of having to type it in.
I will put them on favorite, right?
Yeah, that's right.
Yeah, so this is not a lower low, this is a higher low because it couldn't break this low. So we have a higher low here. Then we don't have a higher high. Instead, we have equal highs because on the body candle, we have it equal. Then we have a bit of consolidation in this region. We call it price is having some sort of indecision behavior.
Okay.
Price is having some sort of indecision behavior. And after a consolidation, what do we have? We have what they call a manipulation. Then we have the distribution. An accumulation, which is the consolidation time. We have the accumulation, which is the consolidation time. We have the manipulation, and we have the distribution. The accumulation, the manipulation, and the distribution. And the accumulation actually brought about the broke of this structure to the downside.
Can I ask a question right there?
Please.
How do you help identify your accumulation in there? You just supposed to look for the candles that are really close together?
Now, price is meant to move three ways. Price move either to the upside or to the downside or sideways. Price is meant to be trendy. When price is not trendy, it's moving sideways. Now we have a trendy market right here. We have another one right here. We have this behavior. Price is not trendy. Price is moving on the same range. That's a consolidating range. Price is not trendy. If you look at this other side, what's the problem? If you look at this other side, we have a trendy market because why? Price was breaking structures, a higher highs, a higher lows, a higher highs, a higher lows, higher highs, higher lows, higher highs, higher lows, right? We have a trendy market right here. Now coming to the right-hand side of the chart, we can identify any trends. We can identify a higher highs, nor a higher low. That's a consolidating market. Is that clear?
Yes, yes, thank you.
Beautiful. So we have our accumulation. Our accumulation here is called the AMD. We have our distribution here. Manipulation rather. Sorry. We have our manipulation right here. Price was manipulated to the upside. That was a faking buy. Then we have our distribution going all the way. We have our distribution going all the way down. So this is accumulation, this is manipulation, and this is a distribution. So now, after the indecision behavior of the market right here, it moved up, faking a buy and dropped down. Price continue on the what? The high. But take note, did you notice that price closed above this candle, creating a new short-term high? This was the last high we had. What did price do? It made sure it broke the structure. It broke this structure. It came up and broke this structure, creating a new short-term high. And after price did that, what happened? It fell down, breaking this consolidation range, breaking the range, right? That's where we have price broke that range. So we begin to have This is a high here. That's a short-term high here, right?
Right.
As long as we have this is a high here, short-term high. Yeah, we have our lower high here, right?
Right.
And we have our lower lows right here. So I'm going to clone this. Now, if you look at this area where I am trying to clone the alphabet, if you take very good notice, you see that we have a trending market, right?
Mm-hmm.
Do we? Yes, we did.
Yes,
We do have a trending market. Now, when we have a trending market, price is not consolidating. We have a trending market, price is not consolidating.
mm-hmm.
So this is all about a bearish market structure. So do you have a question in regards to this? Before we continue to the next time frame. This is a monthly candle. A candle here is a month. A candle is a month. So this is a monthly candle. Why am I using GBP USD? It has very good liquidity volume. Price move spontaneously. It's very fast. We have high volume. People are trading the asset very well. So we know when price is not trading, it's consolidating. So I needed an asset with a very good volume. That's why I used GU. So do you have any question in regards to this, the bullish and the bearish market structure on this monthly time frame?
No.
Are you
You did
sure?
a very good job explaining. Yes.
Sorry?
Yeah, I'm fine. Mm-hmm.
Okay, that's very good. That's very good. We have our stop punch right here. Liquidity purged. When I'm teaching you liquidity, I'll teach you that.
Okay. That's next week's lesson. I mean, tomorrow's lesson, I think.
This is liquidity purge. So now I'm going to go to the weekly time frame, right?
Okay.
Okay. Now here's the weekly time frame. Now the monthly time frame will tell you what price is doing in a month. On the monthly time frame, we have price moving in the direction the market is meant to go on the long-term region. On the monthly time frame, on the monthly time frame, like I was saying, we have price moving in the direction where the banks are aiming to, take their money to on a long term. Now we have different participants that actually make up the market makers, right? But in this market, we have these two participants. We have the buyers and the sellers. But people that actually make the market move, we have different participants of them. And these people don't trade the lower time frame. They move price on the higher time frame. They move price on the higher time frame to the direction where they have their long-term investment. They determine how price should behave. They determine where price is meant to go. They determine what the value of the currency should be saying at a particular time. Because believe me not, right? Every one of this currency, whether they are dropping or they are moving high, there is a certain way they balance this the movement. That's why you see price, no matter what price is doing, even if it's dropping, you will notice this currency is strong today, the next day the other one is weak. There's a way they have to make a balancement of all of this currency. They balance it up. That's why some is weak today, the other is strong the next day. So it's a win-win for the market makers. They don't lose. The only time they lose is when they mitigate, and they mitigate their loss and they break even. So what we all need to do is to learn to move our assets alongside our peanuts, not even asset. I don't think we have asset anyway. We have peanuts in the market, and that's what they're looking to steal. They're looking to take our money. We only need to look for where they have their others, where the price is moving towards, where is the void the market needs to fill, because market must fill every void, even if it's creating those structures. Those structures are created to fill up voids and imbalances in the market, right? So now we need to look for where we have this void. We need to look for where we have all these imbalances, place our order right on the spot. When they're moving their money, we align with them. That's why we're called the ICT traders. We only want to know how the banks move this money. They cannot hide these large volume orders. They cannot hide the imbalances in the market. It must be filled. So the process they are filling these imbalances, that's what we are looking at. That's why, as a very smart trader, look for where you have imbalances and look for where price is going to fill up, because imbalances are liquidity and price does not chase any other thing other than liquidity. Did I just make a very good sentence now to you?
Yes, you did. You did. You said look for those big orders because they got to fill that void. So
Beautiful.
if we can find that, we know where their orders are, right?
Beautiful. Very beautiful. That's just in summary what I said. Okay, now I'm going to go to a bearish market structure and a bullish market structure on the weekly time frame. Now, the weekly time frame, it's almost as good as the monthly time frame, right? But the weekly time frame, we almost give you more of a structural view the monthly candle will not give you. Where a weekly candle might be doing a little short-term retracement, the monthly candle might not be showing you that, right? So a weekly time frame is really, 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 really important, because if you really want to make money in the forex market, you need to look for how the market moves on a weekly range. A weekly range. Now, take for instance, we have this range. Can you see where I have this thing? I think I marked it. I marked this from the monthly, right? But you can see it's also on the weekly. Now, take for instance, like I told you, this was a high. Do you remember I said this was a high?
Yes.
Yes, beautiful. Now, on the weekly, is it showing us as a high, yes or no? It did. It did. I spot it from the monthly. Now, I told you that was a short-term high, right? That was a short-term high, meaning markets created that high because it didn't break the previous one on top, but it broke the ones we have after the mitigation range. It broke those structure and create a short-term high to start afresh. Now, this is a high. So I will call this my weekly range high. I hope you're enjoying this class.
I am. I'm learning a lot. Thank you.
Okay. So I'll call this my weekly range high. When I'm doing my setup, I look at all of these things. So you understand why I frame my setup a certain way. And I think you can do that and even better than me when you start, putting in that effort. But this thing.
So every single pair, you start out with the monthly first, the weekly, and then go down to.
I do.
Okay.
I am not using a premium on TradingView. If I have a premium, which I think I will do that next week. I'll subscribe to Premium Trading View, so I have all the time frame. I'll do that next week, by this weekend rather. I'll do that by this weekend. If I have a premium on Trading View, I would use the yearly candle. I want to study how market move on a yearly candle. I would use it. So now this is my weekly range high. Right? That's my weekly range high. I'm looking at price moving in that direction. And this is my weekly range. This is my weekly range low. This is my weekly range low. And we have a complete break of market structure on the weekly. Now you understand why price is going high on GBP USD. It has broken this low. This is a weekly range low. This was a low that was created before, right? And now we have a break in market structure. Now, where is this move coming from? Where is this move coming from? Who started this whole movement? Who started this whole movement? You trace it to the top, the weekly range. There's a block up there that sponsored this range, that sponsored this move. So now I have this as my break in market structure to the downside. I told you break of structure, BMS, BOS are the same thing. So don't get confused when you see people using these different terms. They're usually the same thing. Now, if I come to this spot and I zoom my chart properly, if I come to this spot and I zoom my chart properly, right, I'm going to see where the market last placed a demand order, which is this blue candle here. This was the last spot we have a demand order. This was the last place price. The market makers had their last buy. This was where they had their last buy, right?
Right.
Now, when they have their last, that's a weekly blog. When they have their last buy, they started breaking structures to the downside. And that weekly candle was responsible for the break of structure. This candle was responsible for the break of structure. This candle was responsible for the break of structure. And you can see how it was taken out by a strong supply force. This candle is responsible for the break of market structure to the downside. And we have the break of structure here. This is a break of structure. This candle was responsible for the break of structure to the downside. So now you are expecting price. Don't forget we have this accumulation range and what? We have this manipulation and we have the distribution. Now, price had a short term, a low, and price has broken structure to the downside and we're having price moving. Where are we anticipating price to go? I'm anticipating price to come towards this region because this is a void.
Okay.
We have this imbalance.
I have one question.
Okay.
Remember when you taught me that if it makes a lower low from a previous low, I thought it would go down. Like on another, when it didn't break a low, it continued to go up. But here it broke a low. So why is it still going up? Am I making sense what I'm asking?
Hold on, I'm coming. Let me put this in.
Okay.
Who am I having? Okay. I was trying to fix this stick. I don't know. All these letters, I think I'll start deleting them. They're distracting me. Please write them. What was the question again?
On the monthly.
Yeah.
Okay. It did not break a low, so it continued to go high. But over on this right side, it did break a low. One of those candles came down. So why is it still going up if it broke a low?
Oh, you said if it broke a low. Now,
yes, you go all the way down at the bottom.
Now, look at it. Look at it. I understand what you're saying. Now,
Okay.
yes, it broke this low, right?
Right.
Good. Did it break this low? Was this low taken out? Because now we have a low here. This is a low, right? This is our new low because the
Right.
previous low was taken out. Now, this low that we're having right here, has it been taken out?
I guess not. I guess I was looking at that low, taking out the other low.
Yeah, of course it broke this low, yes. And for it to continue on the bearish move, it needs to break this low. This new low we have here needs to be taken out. But right now, it's not taken out. And this low was taken out with a strong supply. This is a very vital place. It was taken out with a strong what? Supply. This low was taken out with a strong supply. Now we have this low here. We have this liquidity void here. This low is not being taken out. For we to continue on this bearishness, we need this low to be taken out. But instead, price went ahead and break this high. For a bearish move to continue, an immediate high must not be broken. Take note. For a bearish move to continue, even if we have a stop hunt, it should not be taken out. This is a break of structure. For a bearish move to continue, the immediate high created by that low should not be taken out. The immediate high that creates that low should not be taken out, but this clearly has been taken out, right?
Right.
What do we have here? We have we have a high, we have a low. Do we have a lower low? Do we have a lower low?
No.
What do we have next?
Well, we just have.
We have
okay,
a higher high.
High. Okay.
We have a higher high because this is a high. This is a high, right?
Right.
And we have another high that broke that high. So we'll have a higher high. Are we together?
Yes. Yes.
Are we together?
Yes.
Now, when you look at this whole move on the longer scale, this is how the banks move money. They don't look at the lower time frame, right? They are after where they edge their funds. They are high institutions. They move billions and trillions of dollars, right? And pounds and all those big money, right? Now they are moving their money to fill up all this because they have drawdowns on all of this. This is a very massive imbalance. This is a massive imbalance, right? This is a massive imbalance. We have this BC here. This is a massive imbalance. We have those BC here because it's an inefficiency on the buy side inefficiency and sell side imbalance. We have this BC here. We are looking at price coming to fill up this void. So on the long term, GBP USD is bullish. Because if you go to the monthly, this is a monthly. Where's price on the monthly? If I also do a monthly range, where's price on the monthly? Price is on discount. Now I sent you those documents I sent to you. If you look at it, you see we have a discount and we have premium, right? Now, this is our monthly high. This is the range. Did you see where I pick up this tick from? And this is where I ended it, right? If I also take it from it, this is the low. This is our low here. You remember this is our low on the weekly, right?
Right.
And this is our high on the monthly, right? Now, this is our monthly high. This is our monthly low. On the monthly range, if I also use a fib to check my high from my low, where is price currently at the moment? Price is at what? Discount. Did you see that price is at discount and price is long-term bullish, GBP USD? Now, price is long-term bullish on GBP USD on this range this is our dealing range. This is our dealing range. This is our dealing range. This is the low price that's created on the currently now. This is the high we have. We also have this high here. Don't forget, we have this imbalance on this spot. We have this imbalance here. We also have this imbalance right here that needs to be filled. The chart is messy. You know, it's a class chart, right?
Yes.
We have the imbalance that needs to be filled. These are all the things I look at when I take out my analysis. Can you see the movement? Now, on this monthly dealing range, price is at discount. Why is price at discount? You'll be curious, right? Why is she saying prices at discount? Who told her prices at discount? Now, price is at discount because it's below the 50% of the Fibonacci. The Fibonacci is a measurement scale that scale price length if its price is moving in a balanced momentum. Price needs to move in a balanced momentum. When it goes up, it needs to come down, retrace into an optimum trade entry, 62% below the 50% Fibonacci or the 50% Fibonacci, or an optimum trade entry, 72% or the 79% Fibonacci. Now, when price does this movement up and down, that's how it creates these structures. It gives you re-entries. It gives you when to go. Then now when price is going like that in the manner, it's balancing that movement. Now, price is not yet on the 50% of this range. Actually, price is still low. It's still below it. If price gets to what, 50%, you can look at what we have here. What do we have on this imbalance? It's just slightly above the 50%. That's why I said GBP USD will keep going up. It might come down, rebalances itself, and still shoot up. So now if I was to look at this chart from a non-biased mind, now price is creating what? Let's look at this range. Let's go to this smaller range here. Let's go to the weekly, back to the weekly. Back to the weekly, back to the weekly, back to the weekly. Now we have our low, right? And we have our lower low, our higher low, right? No, we have a higher low. Sorry, pardon me. We have a higher low, right? We have another higher low. We have another higher low here. I love ICT. You love it, right?
I can tell.
I love it. I will keep studying. This is my ticket to financial freedom. I am not going to give it to anybody. No matter what, I'm going to protect it because I know one day I'm definitely going to make a whole lot of money just by using my laptop. And I'm going to, change lives. Change lives by people just, looking at what I teach, looking at what I do, and they will be able to do better than me. And by so doing, I will change lives. What are you seeing here? Back to class. We have to mix it with a little bit of humor so we don't get strained, stressed up, to teaching, to over everything. A little play makes it smooth and sweet, okay?
Okay.
Higher low, higher low, higher low, higher low, higher low, higher low. Can you see the turn? We have a turn here. Did you see where we have the higher high? Has price been able to break this high? No. We have a void here. What am I doing? I'm not supposed to be selling. I'm supposed to be buying this sister in the Lord here.
So what is a good working definition of void when it's at one price? What is a good working definition of void when it's gone up? Okay, I'm trying to put it in my own terms to help myself understand. And
Come again.
Void. FDG. Void. I'm trying to understand.
FOID. Void.
Okay. Right. I'm trying to understand that.
Okay. Okay. A void. We have imbalance, we have void. A void is a gap in price. Can you see this gap here?
Yep, I do.
That okay, this is a volume imbalance. Sorry, this is a volume imbalance. A void is an imbalance created by massive movement of price to one side of the market. A void is an imbalance created by price as a result of a massive movement of price to one side of the market. Is not balanced, where price tend to move in one direction without balancing itself. A void is a massive imbalance created by price as a movement of price in one direction.
Okay.
Did you get it?
Yes.
Did I explain it properly?
Yes. You did.
This is a void, whereby price is moving in one direction and not balancing itself. This is a void.
Got it.
That is a void. They are usually carried by sponsored candles of 4 hours. They are usually created by sponsored candles, mainly 4 hours. They're usually created by sponsored candles, mainly 4 hours. They're usually generated by sponsored candle, mainly 4 hours. We have voids of daily, but we usually see them on the 4 hours. They're long and they're big. Those are imbalances. This is a void where it has been filled. This is a void where it has been filled. This is a void. It has been filled. All right. So price always will go and fill the void. Now, this is where price is coming to. This imbalance is where price is coming to. So we have this high here. We already have a high here, which I call a higher high because it broke the other high. This is a break of market structure. So I'll call it a high now because I'm looking at it from a different range. This is a break of structure. This is a break of structure. This was the last place price broke structure, right? Now we are having price and we have this long void here. It has not been properly filled. And we also have a weekly fair value gap. When I'm teaching you liquidity range, I'll teach you what's a fair value gap. They're under internal range liquidity. They're internal range liquidity. So now this is where price is coming to fill. You can see all this money. So I'm going to be buying GBP USD massively. This is where price is coming to fill. This is the imbalance. This price is coming to fill. Take out this high, fill up this weekly fair value gap, and have a short-term sell, right? So now, looking at it on the long scale, price has been going up, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, price created this high, right? And it failed to break this high. It started creating what's price creating?
It's creating a lower high.
And what?
And a lower low.
Beautiful. Because this low, we have a closer body candle below this low, so we can call it officially a lower low.
Low.
This one is a lower.
And then it made another one. It made another lower high and another lower low.
Yes, this is a what? A lower high. Once price closes above this high, it will have a close of body candle above this high. The structure has changed temporarily from bearish to bullish because price is respecting the bearish market structure, creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We have here a bearish order block that price is already rejecting from. I think I should be more unbiased when I'm doing my setup because I see clearly now.
So since it's creating now lower highs and lower lows, lower highs, lower lows, but you're gonna be buying it, when do we have to wait for it to show us something before it goes back up?
Now, you would know because now we have, when I'm teaching you other blogs, you understand. I'm just teaching you structure today. I don't want you to get worked up. When I'm teaching you other blogs, how they place other liquidity, you begin to understand, they will begin to take shape. Now, understand your structure. Let me don't take you into how to know when price will reverse. All this coming to when you're framing a setup, when you're placing orders, how market rejects. And I told you something about that, right? Well, now
Yes.
I wouldn't want to tell you that. Let me keep teaching you structure. Understand a shift in structure. A shift in structure can even give you a trade. Now, you know tomorrow, if price is not breaking this high, you know you should be selling. If price is not breaking this high, what should you be doing? You should be selling to this low, to take out this low. And if I also sell just by waiting for a return to order block, because this was broken, just by waiting for it, maybe I'm selling from this 50%, so down here, that's 397, 393 pips. 393 pips. Is that not huge?
Yeah, that's great.
So this is the order block. This is a weekly order block, right? If I was to do the mean threshold, I want to put my setup from the mean threshold. We are doing an analysis already just by using market structure. This is market structure. Most times I don't use the week, I just use the body because ICT use the body. Sometimes he uses the week though, depending on the range. Because sometimes on his feed, he uses the week, sometimes he uses the body. So it all depends on what you're looking at the market. This is the 50% of the order block. So if I was to, monitor this trade next week, I'll be thinking of shorting it. That's if I was to follow the structure, that if price did not break this structure, I'll be shorting it down to this low. And that's 300 and something pips.
Wow. Okay.
Because this already did a stop hunt. This candle already did a stop hunt. So we have a stop hunt here. Meaning that high has been taken out. This has been taken out, right? This high has been taken out. So this has been taken out already, taking out this money resting on this high. It has been taken out by this week. This week took out the money resting on this high. So price has taken out this internal range liquidity resting on this immediate high, and it broke this low. This is a break of market structure. Like I told you, when demand is taken out by a sponsored move, this is a break of structure. This is a break of structure. It broke that low, taking out what? Taking out demand. This demand is taken out by this candle. So now what sponsored the move? This is the candle that sponsored the move, this bullish, this last demand zone. So I'm selling from the 50% down to this low. That's how I got this setup. Just a minute, please, a minute. Hello, Nas. I'm back. Sorry. I have to do a little bit, just something. I'm sorry. Okay. Now, do you understand how we got this sell setup? Do you understand it, right?
Yes.
Because we have the market going up, right? Then we have a strong break of this, demand zone by this, this is the candle that broke this low. This is the other block. This last demand zone sponsored this move to the downside. That's where we have the last place where the market is buying. And you see, when price just tap on the wick, you see price tap on the body. It has tapped on the body. Can you see price has tapped on the body already? If you go to GBP USD lower time frame, go to GBP USD lower time frame, go to GBP USD lower time frame. Is it selling? It's sold a little. It's reacting to that weekly other block on that spot. This is the reason why it's selling a little. But I believe if you tap on this 50% or the optimum trade entry, like I told you, the optimum trade entry is a 72 or the 79% of the Fibonacci measurement scale, right? So now when price gets to this 50%, I am anticipating it's likely to sell. If it doesn't sell, price is going to take out the hold high.
Okay.
If it doesn't sell, price is going to take out the hold high. Now you may be wondering, what is the hold high? This is the hold high that did a stop hunt on that immediate demand area on the 13th of September. This is a hold high, this high here. This is a hold high. Okay. So we already have this market shifting. When this market starts shifting, this market starts shifting. This market starts shifting. The last time price failed to create a higher high on the 31st of May, 2021. 31st of May, this market starts shifting to the downside. So if price comes to this 50%, I'm expecting a reaction for price to sell. What will price do? Take out this previous week high. So this high we have now, this weekly candle we have, this candle we have that's a weekly high, right? Will be taken out next week by the new. So I'm anticipating. No, I'm just a speculator. I just speculate. I don't have a say in the markets. I don't. We're just speculators. So I'm anticipating price to take out this high by creating a new high, tapping into the mean threshold. And if price wants to continue on the bearishness, we are aiming at this low, which is going to give us 393 pips.
Okay.
So this is for the weekly. Did you understand?
Yes, I'm ready to do some homework now and see how I can do it.
Don't overwhelm yourself. I already gave you some things to go read up, right? And I'll send you more immediately after this class to read up. Read only what is concerning market structure. Don't fast track.
Okay.
It's taking more than an hour now. Hope you know that, right?
Right. Yes. So thank you so much. So we need to stop right now.
So
Yes.
don't worry. Let me just show you for the daily. Don't worry. Relax. Maybe so, because some other class may not have to exhaust an hour. Tomorrow we might not take up to this time because you already are getting familiar with it already. So I will just take you the daily. Tomorrow I'll do the 4 hour, 1 hour, 45 minutes, 30 minutes, 15 minutes, and the 5 minutes. I'll do 1 hour. I'll do 4 hours tomorrow, 1 hour, and the 45 minutes tomorrow. Next tomorrow, I'll do the 30 minutes, 15 minutes, and the 5 minutes. So today we did 3 time frame. Tomorrow we're doing 3 time frame. On Sunday we are doing 3 time frame. Is that cool?
Yes. Yes, it is.
Today we're going to stop on the daily. We did the monthly, the weekly, and the daily. Tomorrow we are doing 4 hour, 1 hour, 45 minutes. Next tomorrow we're doing 30 minutes, 15 minutes, and 5 minutes. So why you need to go to the weekly, you don't know if your daily order block is resting on a weekly internal range or external range liquidity. Now, daily is very beautiful. It's more of a structural view. It gives you structure. Daily and 4 hour gives you structure. You can see what we highlight on the weekly is still the same lower highs, lower lows, lower highs, lower lows, right?
Right.
Same thing, nothing changed. As I would tell people, whatever you're seeing on the higher time frame, you definitely will still see it on the lower time frame. Price needs to align because The lower time frame is only noisy because of the many candles, but it needs to align with what the higher time frame is saying, because that's where the money lies. So the daily is more of structures, creating lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs. That's for the bearish market structure. Now let's go to the bullish market structure for the daily. Now for the bullish market structure, we have our low, right? We have our low, we have our high. We have a bit of consolidation on this range because it's not breaking this high. We have our high here. This was the first time we have a break of this high. So we have our low, we have our higher low, we have our higher, we have our high here. This is our short-term high. This is our short-term high. And we broke it here. We'll call it a higher high. We broke it here, so I'll call here a higher high. And I'll call here a lower high, a higher low rather. I'll call here a higher low. And I will not call here a lower high because it didn't break this high. So I'll come here and I'll say a higher high. Right? And I'll come here and I'll say another higher high. Can you see that?
Yes, I can.
Now this high was broken, so this is a higher high. Right? So we have all these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So the market balances itself by doing what we call mitigation. So tomorrow I'll explain mitigation. A mitigation does not break a low or break a high. A mitigation mitigates and continues on that trend. If it's either a bearish trend, it mitigates and continues on the bearish trend. If it's a bullish trend, it mitigates and continues on the bullish trend. What breaks a high and breaks a low is called a breaker block. A breaker block breaks a high and breaks a low. So I think I sent you the definition of the breaker blocks and mitigation among what I sent to you. So now you see price continuing on this bullish move, higher highs, higher lows, higher highs, higher lows, higher highs. Now we have the last high here. We are back to where we started, where we were doing our downtrend. Did you see a new high? No, we just have this last high. So where we have price failing to create a new high and now goes and creates a new low, it's called a failure.
Breaking structure.
Huh?
Failure and breaking structure, or failure swing.
Beautiful. Wow. You're so intelligent. With all these things I've taught you, you could remember so easily. So we'll call it an SMS, shift in market structure. The structure has shifted from a bullish momentum to a bearish momentum, which is a bearish market structure. That's a shift in market structure, a failed swing, a failure swing. Price shift from a higher or a bullish market structure, creating higher highs and higher lows, to a bearish market structure, creating lower highs and lower lows. Now, don't forget, we also have this imbalance right here. We don't know if price is doing a short-term short-term bullishness just to come fill up. We don't know, because price has been doing a lower low, lower high, lower low, lower. We don't know. We have this imbalance here, right? Price can always come back to fill up this imbalance. So we don't know if price is doing this bullish move to go and fill up this imbalance we have here. We have this imbalance right here. We don't know if price is doing this bullish move to fill up this short-term bullish move to fill up this imbalance, then continue on its bearishness. Because now price is going on a bullish move. We don't know if this is a change in trend, because now for we to have a proper change in trend, I need to see a break of this high above, meaning a close of candle, because this is a short-term high. This is supply. When we have a close of candle above this supply, this is a sponsored move. When we have a sponsored move closing above this supply, closing above a break of structure above this supply, I would expect a return to order block on this breaker here. I would expect a return to order block on this breaker. Look for the next demand zone and take a buy up. When we have a close of candle on this high here, if we have a close of candle on this high that has been taken out, the liquidity has been purged out. Or once we have a close of candle on above it, which a body candle closing above this week, taking out this sponsored supply zone, then I'll be looking for the next place, the next demand zone. What is the next demand zone? We have our daily breaker on this spot. We have our daily breaker on that spot. So I'll be looking for buys up to this direction. So I'll be looking for buys up to this direction before anticipating a sell. Did you see the move?
Yes, I see the move.
Did you understand the explanation?
Yes. Yes.
So are we good to go?
Yes, we are good to go. I'm excited. I want to look at everything that you've given me.
Did you love the class today?
I did. I love the class today. I love the way you took your time and explained things, gave me an opportunity to ask questions. I can go back and watch the video again. So thank you. I'm very excited to continue.
You're welcome.